Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview, and this is a very exciting one to me because I think it's very either underappreciated or overlooked, one of the two. Hydrograph is the name of the company, and the ticker symbol is HGCPF, as in Frank. And Hydrograph, I'm going to go ahead and I'm going to let Stuart here explain what Hydrograph does. But Stuart Jara, CEO of Hydrograph, thank you so much for coming in to share your story. But I think this is a fascinating story. I think it's incredible opportunity. I'll be interested to know what the estimated TAM is on this. But Hydrograph, what does Hydrograph do, Stuart?
Great. Absolutely. Thank you, Tim. I appreciate the opportunity to be here and love talking about Hydrograph. So this is a lot of fun for me. So what Hydrograph does is we make consistent high purity graphene, and we do it at scale with the lowest environmental footprint in the market. Unlike others in the market, it's not about just a patent or an idea. You know, we have a full modular, scalable commercial production unit that we invite you and everybody to come look at it, touch it. It's real, which actually, you know, in our view, really de-risks the business and allows us to focus in on how do we commercialize this with customers.
Okay, so we're talking about making graphene here. Right?
That's right. That's correct.
That's correct. At a very high purity level.
Yeah. So graphene itself is a very abused word, right? And you know, even ISO came out with a standard saying graphene is 10 layers and less, and these other things. So there's a lot of things that are over 10 layers. They call themselves graphene that they're not. But even within that definition of ISOs, there's a lot of variability. Our graphene is unique in that it is 99.8% pure carbon. It is 100% crystallinic, and it's turbostratic. What that basically means is that while there's multiple layers, each layer is further apart. And by being further apart means that each layer acts more like a monolayer than a typical multi-layer that are flat against each other. And that has several benefits as far as how quickly electrons move. Its purity. It also means we probably need less of our graphene to get the properties you're looking for than a different type of graphene, if you will.
And graphene, just so we're clear, when I started reading about what they wonder material or super material, whatever it is that you want to call it, stronger than steel, more conductive than copper, harder than diamond. I mean, you start looking at this thing and you're like, holy cow, right? So what are the typical use cases for graphene?
Yeah, and maybe just take a step back so everybody understands. It is carbon, right? That's held together by covalent bonds, which is a very strong bond, and it's one atom thick, right? So that's what makes it very, very flexible and gives it all the other properties. And the applications are numerous. You can go over to 45 different industries. And you hear a lot that's happening in very diverse industries, everywhere from aerospace, so composites. Let's make the aerospace components that are composite stronger with less material, so it's also lighter, so high tech, to concrete, everyday concrete. And make the concrete 20% stronger, you use 20% less, and you emit less CO2 into the environment, right? To, again, battery storage, high tech, new, a lot of conversation in the market about battery storage, to textiles, right? How do you add to textiles the ability of touch on gloves, so you can actually touch your electrical components, for example? So they're very, very diverse. What Hydrograph is doing and recognizes when we put our strategy together is we can't do all 45. And in fact, we try to, we're going to fail, just too broad, right? So we actually focused on 3 main industries. We're focused on lubricants, composites and resins, and coatings. Now, those 3 areas already is about $1 billion out of the $2.5 billion projected growth of the market. So it's a large chunk, but we also targeted because we looked at the end markets that uses those, right? Aerospace, defense, high-end automotive, high-end sports, all end markets that are looking for that higher quality graphene because they're looking for that higher value properties, which means they're willing to pay for that higher value.
And one of the biggest issues, we talked about, is being able to get purity graphene, right? No, because there's different grades depending on where you're mining it from, I would imagine, right?
Yes.
Okay.
Yeah. Look, yeah, and like I mentioned in other webinars and other discussions, is that there's a study done by an independent, not us, where they took samples of 300 companies, other graphene samples, and they found that no one had more than 50% graphene content, and most had 10% or less. And that's what the industry was struggling with. They thought they were working with graphene, but in fact, they were working with finite graphite, which is not the same thing, right? We didn't participate in that study. Had we participated, it would confirm what 5 independent labs confirmed, which is our graphene is consistent, 99.8% pure every time. And it really starts with our process. It's a patented process. We start with commodity inputs, acetylene and oxygen, which has the same specifications everywhere in the world, and put it through a very simple production process that we have. And therefore, the output is defined. If your inputs are defined, your process is defined, your output is defined. That's how we get the consistent high purity graphene.
Okay, so the one portion that I did read about your process, well, I can't remember what the term was exactly. Basically, a little explosion, right?
Yeah. It is. It's interesting, right? It's a detonation, right? So we take acetylene, right? Acetylene is a molecule that is packed with energy. It's just waiting to release, right? With just a small spark of an electrode, we allow that acetylene to release all that energy. It explodes, and it rips the molecules apart, and out comes out graphene, right? So that's the process. Now, people sit back and say, wow, detonation, and should I be scared, right? I'm like, well, internal combustion engine, you're exploding gasoline and pistons and cylinders, right? So really it's about, if you regulate the flow of gases, and so you regulate how much is there, you regulate the ignition, you actually get a defined explosion, which is controlled. And that's part of our process, and making sure that, you know, part of our trade secret or the know-how is, you know, what is the flow rate, how does it go in, how does it mix, how do you ignite it to actually control the detonation. No different than a cylinder or in a car at a little larger scale.
Or a gas barbecue.
Yeah, or gas barbecue. Yeah.
Right?
Yeah.
I mean, it's same thing.
Yeah, it is the same thing. There's a reason why people use propane for gas barbecues and they use acetylene for welding, right? They take advantage of that energy that just wants to release.
Okay. So tell me how give me a little background on Stuart. How did Stuart get here?
Yeah. Well, my background is I started my career with large publicly traded companies. I like to say, you know, where I got great training, phenomenal training. You learn what good looks like. Did everything from financial management, business development, and I ran a $1.2 billion P&L that spanned over multiple continents. Then I shifted careers and went into private equity and startups. So this is the roll up your sleeves, get out of my way. I'm just going to get things done with an insane amount of urgency. And this actually, Hydrograph is my third startup. And I was introduced to Hydrograph when I was in my second startup. That startup actually made acetylene. Now you can understand the link, right? So I was approached from Hydrograph as a customer. It didn't take me and Bob Woke, who's our CFO, he was also my CFO in the other company. It didn't take us long to realize that Hydrograph was going to be huge. We went to our board to try to buy Hydrograph. We got that approval, but we were late. Hydrograph already went down the path of going into the public markets. So we did the next best thing, which is join the company. So I joined the board in December of 2021. Then the board asked me to step in as CEO in January 2022, when we realized we were ready to move from a science company, you know, so R&D and development, to a commercialization company.
So let's talk about the product. You guys have a video, and I will put that video. I'll put a link to the video somewhere, either in the beginning of this, so that people can go watch that, and at the end. Maybe I'll do it both. But very good descriptive video of the footprint, the process. I thought it was really, really well done. Right.
Thank you.
So tell us, what is it exactly that you provide?
Yeah. So we build, own, and operate the production units of graphene, right? So we don't license, we don't sell the equipment, we sell graphene. But what we recognized over a year ago was that this is an industry that's not going to be measured in grams or kilograms, but in tonnage amounts. So that's why we set out a year ago to build. We challenged the team, said we need a modular, scalable production unit measured in tonnage of production. And we announced that unit back in May. And that's what we call our Hyperion system, right? So now we have a production unit. So we worked with customers ahead of that to figure out how we integrate our graphene into their material. And again, like I mentioned earlier, that's very, very important, that integration, right? But also remember, we're changing the material properties of products at the last 10, 20, 30 years. Okay? So there's a lot of testing. So you got to first prove, hey, the graphene you have is really graphene. Then you got to figure out how to maximize integration into the product to get the results you want. And then you got to test to make sure it's going to last the 10, 20, 30 years. Now, once you do that, then we'll go to an offtake contract, where we expect to have 5 to 8 years contracts with take or pays and escalation clauses. And we will commit production capacity either at the customer location where we can integrate with the customer production process. A lot of customers like that because it makes the process more efficient and eliminates the supply chain risk.
So you still own and operate so you're not taking the risk of maybe somebody that doesn't know how to process it or the flow of the acetylene that it's supposed to be. You're operating these things on their properties.
On their properties, or we can do it off-site, right? So it's up to the customer.
Right.
The fact that we're scalable and modular allows us to do that, but we will always operate and control the production process, right? That's part of also our know-how.
Okay.
But also the CapEx is very low. I mean, the payback on capital is measured not in years. I'm used to process chemical industry where I'm saying I need a 2-3 year payback. The payback on the CapEx is 3 months. So why would I license when I have really no capital constraint with a payback of 3 months?
Right. It's almost a no-brainer. I said that at the beginning of this thing. It seems like a no-brainer, and that's always when I get scared, is when it's a no-brainer, right? But then again, I know that I've been doing this long enough that sometimes it just takes the street way longer to get it than you think it should, right?
Yeah.
So let me ask you a question. How many shares do you have outstanding fully diluted?
So we have about 174 million shares in the market.
Okay. That's not extreme. That's not a bloated share count by any stretch, not in my mind. Right.
Right.
And that's with converts, warrants, and all that stuff.
I can tell you our warrants here in a second. That's actually the actual shares.
Okay.
The warrants outstanding is 61 million.
61. So you're just over 200 shares.
And options are 17. So the fully diluted is 253.
253. Do you have, now this is where it gets sticky, right? How are you on cash right now?
Yeah. No, so we've been pretty public about this. So we will be going out for a capital raise in the late August, early September time period.
Okay.
We're still deciding how much we want to raise this time around. But here's the bigger picture. We think we need about 7 to 10 million US to take us to break even.
Okay.
Okay, so it's not, tens of millions. And we also think the break even is going to happen in late 2024. So we're not talking, 3 to 5 years out. And part of the reason those economics are is because the production units themselves, because we expect to have contracts, we're targeting to have contracts in the second half of 2024. The margins have been pretty public. We're saying is our EBITDA margin, fully burdened corporate overhead EBITDA margins are in excess of 40%. So you can then obviously our variable margin is much higher than that. So we actually generate cash very quickly with contracts.
Okay. This is the concern. And I'm just going to throw this out there just because this is the reality of where we're at today. And that's the biggest problem with the small and micro cap space for the last 24 months. They got their asses handed to them, right? I don't care what kind of news they came out with. It didn't matter. The stock went down. Okay. That's for 90% of the micro caps, right? It had nothing to do with what they're doing internally. I mean, there are companies that have grown, that have, worked through a pandemic, that have gone through the fastest interest rate hike cycle in history and the worst supply chain issue problem in history. Yes. And they're still got stronger, but they have not been rewarded. As a matter of fact, some of these companies, their stock is down 90%. So it's not a company issue, but here's where we are now. The Fed, with all the interest rate hikes, if you're a small to micro company that needs capital, the deals are horrendous, right? I mean, they are terrible. Financial institutions are not your friends. They are, I mean, a lot of guys think that they are, but they're not. They're, I mean, I'm just talking reality here.
Yeah.
A lot of people don't know this about the markets, but they're not your friends. They're not your partners. They want the warrants and they get the stock at 30 or 40% below where it's trading to begin with. And then they want the warrants to de-risk, right? And some of these guys, it's the moment they can start selling the shares that they got at 30 or 40% lower, we'll start dumping them on the market. They're creating the selling pressure, right? So that's the reality of where we are, right? Tough market. And that's why a lot of the micro caps, small caps, even though they are down 90% and ridiculously valued right now, they're still staying on the sidelines because they're waiting. If there's a sniff that they have to raise, they're waiting to see what that raise is. And how many, I'm seeing 200% warrant coverage. That's ridiculous. I mean, 200% warrant coverage, your stock is already depressed. That puts a company, I understand what the alternative is. The alternative is turn out the lights, right?
Yeah.
But I could also make the argument that some of these deals, you take that deal, you are turning out the lights, you're just lengthening the process, right? Do you feel as though, are you comfortable that you'll be able to get the financing that you need to get the break even without doing real damage to the balance sheet or to the cap structure?
Yeah. Look, I agree with everything you said, right? And you know, that's the world we're in right now. So that so from that perspective, our timing is not great, but that's where we're in. I don't control that. I do think that we can raise what we need without hurting the cap structure. And why do I think that? Is like I mentioned, I said we need 10 million to get to break even. But I also said we haven't defined how much we're going to raise in this next raise, understanding that our stock is undervalued and you know, like you said, people aren't reacting to the good news we put out in the market. We put quite a bit out recently. So we're considering that. You know, we are talking to a lot of new investors, many who actually come from the industry. So they actually understand the valuation. Actually, we've been told by different investors that if they did their own valuation, you know, we would be worth 10 times what's trading the market today, but they're not going to pay a 10 times premium. I get that. We all get that, right? So we're having those discussions. We're also quite fortunate to have very supportive base investors. Who continue to invest in every race. So, you know, would they like to see the stock price higher? Yes, but they're long-term players. So they're managing their dilution by reinvesting, right? And avoiding dilution. We also have a management team who actually participated significantly in the investment. So since going public, did a public raise. We did a raise in September of the public raise was in December 2021. We did another raise in September of 22. We did a raise in April of 23. Okay? In those three raises, the management has invested about 1.6 million of our own personal capital, which is roughly 13 to 14% of the capital raised. Okay, yet we don't own 13% of the company. Right? There's a whole bunch of founder shares from before that, right? So that actually goes to say that we have a very committed management team. We see it. We're doing the longer term play on this. Do we want different investors, new investors? Absolutely. We would love to do that. That will value us the way we think we need to be valued.
Are there any hurdles for you from I mean, setting up these facilities, right, on somebody's property? Are there any hurdles that would prohibit that from happening? I mean, are you safety concern or anything of that effect?
No, right? And the reason why is we're all going to industrial locations. Show me an industrial facility that doesn't have a acetylene welding cylinder on site.
Right.
You know, so that really helps. What we do need to do, you haven't asked this, but I'm gonna go ahead and share this. So what we do need to do is that our graphene is nanomaterial. In the US, nanomaterials need to have EPA approval. We're well in the process of getting our EPA approval. So right now, we have approval to supply unlimited quantities of graphene for development purpose, which is a stage we are right now with our customers. We expect to get the EPA approval well in advance before there's any product in the commercial arena.
Okay.
But we started that process almost a year ago. You know, we're always trying to plan ahead. You know, he said, "You got to do this. Let's not wait." In part because you know it is the government, it is EPA. They can take their own time, right? So it's like we're not waiting.
There's no specific timeline. I mean, they're not going to tell you by this time you're going to have an answer, right?
They're not going to tell us that. But this is what I will say: is we're 10 months into that process. We quickly responded to every follow-up question. There's nothing that's made me concerned on the questions of our process. They'll be on our site in September doing air quality control. That is scheduled, so I think we're ahead of schedule.
So let me ask you this: from a demand side of it, and is the actual graphene, real graphene, difficult to get? Is it because of that difficulty to get and the inconsistency of purity that has maybe curtailed how many things graphene could have been used for, right? Because there's only so much that you can get that's actually good. Does that make sense?
And that is, but I'd almost go. It starts with how do you integrate graphene or any additive into material,
right?
And you have to figure out that science first, right? And that is definitely influenced by the quality and the consistency. If you're not consistent, you'll never get there,
right?
And that has been a huge issue with the market.
And you go that in the video, and you've got a honeycomb thing going on behind you there about how you do kind of integrate or infuse the graphene into the molecular structure of whatever, right?
Yes.
It's that honeycomb thing behind you.
Well, yeah, the honeycomb is the actual graphene structure, right? So what we actually do is add functional elements on the outer layer of the honeycomb.
Okay, got it. And that's what attaches to whatever material it is that you're trying to attach to.
Right. And our differentiating factor is that we actually functionalize the outer layer, right? Which means that the outer layer bonds, but the core stays pristine graphene. So you don't degrade the value of the graphene.
Which to me sounds pretty darn exciting.
It is quite exciting. Which, you know, again, you know, it's I'll go back to the earlier comment. You know, it's not that we're excited about it just because, you know, some of us are engineers or some of us have the ESG drive and some of us like more stuff.
That's another thing. You just touched on another thing. I want to make sure we don't bypass that. The first thing I thought of when I was listening to your guys, when I met them, I'm thinking to myself, this could be a potentially an ESG play, right? Yes. And it is, and you just clarified it for me before we turned the recording on. You're an ESG play on both ends. You yourself as a company, yes, and your customer.
Yeah, and it's because we use very little electricity, right? We just use a spark and electrode that excites acetylene for the reaction to happen, right? So very little energy, no chemicals, no solutions that are poured on, spilled on, that to be picked up or swept up. It's a very, very clean process. I think we calculated something that each of one of our units will produce 1,000 tons less CO2 than other technologies of making graphene. That's on our side, right? Now look at the customer side, and I use this example because you can visualize it. Picture a wind blade, huge composite pieces of structure. With our graphene, you strengthen the property of the material by 25 to 30%, which means you could reduce the composite material by that amount. So you're saving all the CO2, energy, and costs from not having to produce that additional 25 to 30% of that material. So all around, there's an ESG play, which all our customers are concerned about.
And then as I'm listening to you, you talked about battery storage, which I mean, if I'm just looking out 2035, we're supposed to be going all electric. I mean, how that happens, I don't know. But anyway, well, that's a whole nother story. But if we are going to be there, we're going to need one hell of an infrastructure to be able to do that. And I think battery storage is going to be a big component of that. And would I be off base in saying if there was a consistent ability to produce as much graphene as you needed, is that likelihood of the graphene then becoming more integrated in more things? I mean, isn't that kind of like just telling in a way? No,
it is, right. So and a differentiating factor for us is low capex, modular, scalable units. So we can put our units anywhere, right? So it's not, we don't have to build a large complex, build in one location, then ship to it. We can build locally, and because our raw material is acetylene and oxygen, again, something you find everywhere in the world. So that allows us to be close to the customer and build to the customer demand. A customer needs an additional 50 tons. We'll plot 5 units right down next to each other. It goes down to 40 tons. We'll pull one out. I mean, it's that kind of scalability and flexibility. Now you put that for a growth market like energy storage, you're not pulling anything out. You're adding, because that demand, as you mentioned, is going to be growing. And we're just scratching the surface on understanding how Hydrograph's graphene can add value to the energy storage. There are 2 data points we've learned recently. One is on lead acid battery, using our graphene, we can increase the charge acceptance rates of lead acid batteries, right? But I'm not a battery guy, right? So and when somebody came to me talking about lead acid battery, I'm like, that's dead. Why are you talking about that? No, the lead acid battery is a $45 billion market, and it's growing because of the EV market, because most EV vehicles still need a lead acid battery, right? So that's exciting. Work that was done at Washington University found that our graphene worked very well on what could be the next generation of lithium battery, what they call lithium air, right? And lithium sulfur. So that just came out in May, June, a press release on that. So we're just starting to learn about how Hydrograph product can add value in the energy storage market.
right. I mean, if I'm looking at engineering something or improving something, and I'm looking at the raw materials that I need to put for the inputs, and I'm looking at graphene, and yeah, it's the super wonderful thing, diamond strong and harder than steel and all this other, stronger than steel, but very hard to get a big amount of supply of, and very hard to get consistency now. So that takes that right out of my equation. I'm looking at the other inputs, right?
Yeah.
But now you are providing a solution that says we'll make as much graphene as you want, right?
Yep.
Then all of a sudden that becomes the component that they start focusing on, and that's why I'm saying we probably don't even know what the real big industry is going to be for graphene.
Yeah, we don't know because we're the whole industry is revolutionizing the applications, right? So if you take third-party market data, they're projecting that the graphene industry today, roughly again about $100 million, is going to grow to 2.5 billion by 2028. Right, very, very steep growth. But what we really believe is as the market starts learning more and more and getting more consistent graphene, that number is probably going to be small relative to the actual market because we'll learn of different ways of applying graphene.
I can see that. I can see that so easily. I mean, I'm looking at one of the things that scares the hell out of me is the Chinese own and control about 90% of the world's supply of materials for batteries.
Yes.
We didn't learn anything from oil and gas that you probably don't want to be reliant on foreign entities that don't like us very much for our energy needs.
Yes.
And that's where we're at, right?
Yes.
That scares the shit out of me. And not only that, but you know how long it takes to get a mine from conception to production in the United States? It's 17 years. 17 years. It's not that we don't have the materials in the US. We've got cobalt and magnesium. We got all that stuff. But we got to get the approval to put a mine there and mine it. And nobody wants a mine in their backyard. So that's a problem. And then there's the burrowing beetle. You can't disrupt his home because he's important to humanity. I mean, there's all kinds of things that are going on that scare me. And we need an alternative solution in a quick way, in my mind.
Yes.
Because I don't think we are going to go away from EV. I think that's coming no matter what, right? So if that's where we're going, you're sitting, I think, and maybe I'm way off base and on another planet or something, but I'm thinking you're sitting in a very good spot right now.
We feel so, right? And our approach when I came in and I built the team, we actually sat back and said, pause, set a strategy, set a vision, build a team around that, and then execute on that. It was really about saying, get the patent technology sorted out so it's clean. Get the production done, sorted out so it's clean. That leaves us now focus on the customer. I don't have to figure all these other stuff out. It's already done. I've proven it. Come to Manhattan, Kansas, see our production facility. It's not an idea, it's there. That allows us to focus on the customer and then say, okay, now how do I work with you to integrate our product, right? So to us, we believe we significantly de-risk the business. And our risk is really about how quickly we could solve the problem of integrating our material into the customer's property and doing that longevity testing. We've narrowed the risk to just that. The economics, they've been quite vocal, is quite compelling. That each production unit that makes 10 tons a year costs us $150,000 to build, will generate over $2 million of sales and over $800,000 of EBITDA. So even on that fact, and I know that number, right? Because I have a production unit. I know what my input cost is. I know what my operating costs are. I know all that. Back into de-risking the business. Get rid of the unknowns. Narrow your unknowns to one or two things. Focus on that and getting that executed. That's where we are for the customers.
You need to get, like, how they have 510K clearance and all this kind of stuff. Is there any in the US, is there any kind of I don't know, rating that you would have to get on your equipment, or no? I mean, it's
no. Look, I think really it's going to be less about what is required regulatory wise from a permitting perspective. Again, acetylene is a pretty commodity gas. Most places have it. I suspect most of our customers are going to have requirements that are much more stringent than the local zoning, right? So it'd be working with, if we do it on site,
right,
be working with them. Otherwise, it's that and EPA. It's pretty straightforward.
So listen, maybe I'm early, and that's okay because I like being early. done this most of my life. I'm way early, and it's a patience game, and it's sometimes very painful patience game, but eventually it does pay off, right?
Yeah.
What do you see is the, I mean, so you've got the cap raise coming up. Once that, you know, and who knows what that winds up being, maybe you just do a small one, and then when people start to appreciate the story more, you go for the remaining 7 to 10. Who knows? You see how it plays out. But then after that, I mean, you just said it. You've got the process. It's done. It's de-risked. It's a proven process, right? It exists. Come see it anytime you want. I mean, you've solved all the problems. Now it's just the customer and binding to whatever it is they want to do. But then it opens the door to new customers looking at graphene and saying, wait a minute, we can get unlimited supply of graphene, have it right here on site. Let's take a look at this element as, I mean, who knows where this is going, right?
Right.
Elon Musk has got to get one of these for his Tesla plant.
That's on our list.
I would imagine so, right?
Yeah.
I would imagine so. I mean, this is exciting stuff, and that's why I wanted to have the conversation now.
Yeah, and you know, you say something about being too early, and that's a little bit relative. So let me just share what I see, how I see timing, and you can, you know, I don't think it's early. I think it's the right time, and here's the reasons why: is it doesn't take us 2 years to build our plant. We can build our plant in 3 to 4 months. So what I just say, this is not field of dreams. We don't have to build it and they will come. We'll secure a customer contract. With that contract, we will build a unit, and in 3 to 4 months, we'll have it on site, producing product per the contract. So the patience is the time we require to work with customers, again, to figure out how we integrate it with their product, and them doing their longevity testing, right? Back to the wind blade, right? And you know, it's not just good enough to show, hey, it works today. That blade has to be there 30 years, right? So how do you cycle it in the lab enough times to simulate 30 years? And once you do that, then they'll put it in the product and for commercial purpose.
I just see all kinds of opportunity here. Is graphene used in the chargers for the phones, and is that graphene that's used in that, or no?
And I don't know so much if it's in the chargers, but on phones, for example, you could put graphene on the back of it, and it'll help dissipate, or any electronic equipment, it'll help dissipate heat, right? So what's a big problem with phones, you know, especially nowadays, it's just the heat, right? So you put graphene, it'll dissipate the heat and keep it cool.
Okay, so that would help with thermal runaway for right?
Yes.
I just think this is really, I think it's a exciting story, and what I'd like to do, Stuart, is I would like to what do you see as maybe the catalyst over the next 6 to 12 months for the stock?
Yeah, so we're going to, by the end of the year, we'll announce commercial scale production of our reactive graphene. So you start with the fractal. Remember, the reactive is when we put the functional units on the outer edge.
Yep.
That'll be announced sometime around the end of the year. And by the way, we're announcing these commercial scales not because we don't have production capacity now for testing. It's, again, to de-risk and to prove folks, hey, here's how it's going to work for you. We will continue to see some further announcements on application results, like most recently we've announced results in lubrication, where we showed that graphene with our lubricants with our graphene reduced the coefficient of friction by 70% and extended the cycle time 23 times. We're now doing tests on anti-corrosion and anti-static for lubricants. We'll announce those results. when we can. So this is also the kind of the balance, right? When we're doing our own application study work, we can publicize that, and we will. When we're doing it with the customer, we're under NDA. So there's a lot of other good news that I can't share because of those types of NDAs. But
Right.
we'll announce certain other application discoveries and throughout this year. What I expect is we will announce a customer contract sometime in the second half of 2024. And if the customer allows it, we will announce a cooperation agreement, which is when we do the longevity testing, sometime in the first half of 2024. But as you can imagine, and I think you understand very well, is the customers all are very stringent on the NDAs for logical reasons. They don't want their competitors to know
Right.
what they're working on.
Right. That's the problem. I mean, you brought up earlier Department of Defense, right? So, I mean, that's a situation where, you could tell me, but you'd have to kill me. You're not going to be able to disclose what it is that whatever it is being used for the DoD. That's just going to be part of the deal, right?
Right. And if we're dealing with, which we are with tier one, let's say, petrochemical companies, those are big behemoths. Their lawyers are all over this. They're not going to allow us to talk, right? If we're talking to a small startup, we will be able to announce those. So that's sort of the dynamics.
Right. No, I think this is a very, very exciting story, and I don't tell anybody what to buy or what to sell. It's not what I do. My whole thing is I think Wall Street's broken. How do people find good quality, low price stocks that are what I would say potential game changers, right? Where you're literally going to revolutionize an industry, or you're going to solve a big problem. And I could see two of those things. I could see one of those things happening from your product easily, right? Maybe more than two. I don't know. But I think there is a lot of potential here. I'm not telling anybody to jump out and buy it today. What I would say is at least put it on your radar. Pay attention to what's happening with the company. I mean, right now, so I'm a technical guy, Stuart. More importantly, I'm a fundamental guy. I started out as a fundamental guy, never believed any of the technical stuff. Took a course like 15 years ago. First thing I look at now is the technicals. But what I try to do is I try to align the technicals with the fundamentals. And if you can align those two things, you could potentially have a very explosive, no pun intended, opportunity with stock of getting it right? So you've been in a downtrend and it's very obvious to anybody. I mean, you look at it, you can see things going from the upper left to the lower right. When that trend changes is when you have a trend change is a big deal. It is because your momentum was going this way. It takes something of greater force to change that momentum and put it in a different direction, right? So if you can find that change in direction, which you are starting to already stair step higher. Stocks have a tendency to take the elevator down and they take the stairs up.
Yeah.
You go up a little bit, you consolidate, and then you go up again, you consolidate. That's very healthy action. A straight up shot to the moon is nice for a trade. It is not sustainable, right? So I would much rather see the stair stepping and not the straight shot to the moon, right? And I can see that. I think there are some questions as to financing, but if you have a product, how long is the actual process? You said, was it May that you finished that? I mean, it was done.
We've been producing graphene for years.
Okay.
What was completed was, how do I take it from kilogram level to tonnage level,
Okay.
which we've used commercial. That was done. It's our Hyperion system in early May.
Early May. Okay. And it didn't resonate with the market, not because it's not important news. It's just the market at the moment,
Yeah.
right? Doesn't matter. Nothing matters. But I think that's going to change because I think people are, they are underestimating the animal spirits of investors. They've been sitting on the sidelines for like 2 years. Small cap, micro caps are not going away. Every major big cap at some point was a small cap.
Yeah.
Right? There are garbage companies that are penny stocks, and there are garbage companies that are $100 a share. Okay. It doesn't, price means nothing to me. It's the story, it's the leadership. Do you have a vision? Do you have a strategy? And are you executing to get there? So what we've talked about our very first time meeting, I think you've shown me that you have the vision, have a strategy, and you are executing, right?
Yep.
Can't ask for much more than that. Now it's a matter of, can you get through this bullshit economy and the recession that's supposedly coming, which I think we've already been in one. We're actually towards the tail end of it.
Yeah.
And everybody's waiting for the other shoe to drop. I think they're going to miss a massive rally. That's what I think is going to happen. Most people are going to be sitting on the sidelines because they're waiting for the other shoe to drop that never drops. There are a lot of good things happening in the world. We just tend to focus on all the negative stuff.
Yes.
There are some really good things. There are companies like yours that are going to change industries, that are going to revolutionize things, that are going to make us more efficient, safer. I mean, I don't think people see everything that's coming, but there's a lot of good stuff coming. So I think you're right in the sweetheart spot of that. So I want to thank you again for coming on. You have in email alerts. If people go to your website and go to the investor relations page, you have email alerts, right? Actually, I know you, because I put it right here.
Yeah. Yeah. So certainly come onto the website. Those who are interested, sign up. Follow us on Twitter, LinkedIn, and even though the market's not reacting, we'll continue to put out our good news because
and at
it's
some
coming.
point, you will be rewarded. I mean,
Yeah.
It will happen unless it's the end of the world. Then if it's the end of the world, I'm sorry, Stuart.
Nothing matters.
Nothing matters anyway, right?
Right.
But if you keep executing and you keep doing it, at some point the market's going to recognize the story. And when they do, it's going to be a violent and vicious rip your face off rally. That's kind of what I see. But we'll keep expectations low right now. What I want to do is the next event that you feel is maybe significant, right? Or you have whatever it is. I don't care what it is. You now are in contact with me. You reach out, you say, hey, I think we've got something that we may want to update everybody on. We'll have you back. It won't be as long of a process as this one was, but we'll keep everybody updated. Sound
Okay,
good?
great. I'll definitely take you up on that.
Okay, all right, Stuart. Hold on one second. I'm gonna turn this off.
Okay.
And thank you again for coming in.
Thank you, Tim. Thank you.
All right. Thank you for tuning in to another CEO interview here at Alpha Wolf Trading. Today we had Stuart Jara from Hydrograph Inc. Ticker symbol HGCPF as in Frank. I hope you enjoyed today's interview, and if you did, do us a favor. How about giving us a like? Why not give us a share? And while you're at it, how about giving us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.